Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 11th of August. RBNZ cuts rates and signals more to come. The Reserve Bank of New Zealand cut interest rates by 25 basis points as was widely expected and signaled that more monetary policy easing may be needed. However, the Kiwi surged on the news as some market participants were pricing a slightly larger cut and were disappointed with the decision. Similar to Australia's RBA decision when the Aussie soared after the bank cut rates, the New Zealand dollar was pushed higher as investors continued to search for yield in a low rates environment. In the statement accompanying the rate decision, bank officials noted that a decline in the exchange rate is needed and that the trade-weighted exchange rate is significantly higher than assumed in June. Even though the short-term technical outlook of New Zealand dollar, US dollar is positive, the clear easing bias comes against the decision spike. As such, we would stay cautious with regards to the longer-term outlook, as the upward pressure on the Kiwi could be the catalyst for further rate cuts and for the monetary policy to remain accommodative for longer. Elsewhere, oil prices fell yesterday as a build-in US crude inventories and the record Saudi Arabian production weighed on concerns of a global crude glut. The US Energy Information Administration reported rising inventories for a third consecutive week, which pushed WTI off its recent highs. WTI was trading slightly above $43 per barrel before the release, lifted by OPEC's upgrade of its forecast for global oil demand the previous day, but fell sharply to trade close to $41.30 towards the late US session. Overall, the recent declines in oil prices have revived speculation for an output freeze, with OPEC members to hold an informal meeting late September. Nevertheless, we will need something more than just talks in order to materially change our bearish view on oil. Let's not forget that back in April, expectations for such a move skyrocketed heading into the Doha meeting, but any prospects of a deal fell apart after Iran refused to join in. As for today's highlights, in a relatively light calendar day, Sweden's CPI data for July are coming out. Both the headline and the core rates are expected to have declined. At its latest policy meeting, the Riksbank reiterated that it remains highly prepared to make monetary policy more expansionary if needed, even outside of scheduled policy meetings, in order to safeguard the upturn in inflation. As a result, we believe that a marked slowdown in both the headline and underlying inflation is likely to raise speculation for further easing by the Riksbank this year. So this could bring SEK under renewed selling pressure. From the US, we get initial jobless claims for the week ended on the 5th of August, and the forecast is for a decline. Following the overall low initial claims throughout July and the stellar employment report for the month, a decline in claims for the first week of August could be a sign that the US labor market remains robust. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.